Yo, 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 what's up? What's up? It's Coach Nick, Money in the House, and in this episode, we're going to discuss Eargo Inc., ticker symbol EARS, Eargo, I guess it would be, Eargo Inc., and their upcoming reverse split. It's going to be a 1-for-20 reverse split. It is a NASDAQ stock, so let's get right into it. And before we do that, let me just mention that we have links in the description for our Discord, our private Discord channels, which are great resources for information about our picks, as well as information about learning how to trade the way we trade. Let's begin by saying we are not stock professionals or financial planners. This is not to be taken as stock advice or financial advice, but if you'd like to learn the way we trade, we do have our courses in Discord, and of course there's no guarantees as to the outcome whether you take our course or not, but the course is available and our picks are available in the Discord, in the description section, and you can take a look at our Discord and join a fantastic community. So let's get into this right now. Let's get into EARS, ticker symbol EARS, Elephant Alpha, Robert Sam. And it is planning on reverse splitting itself, as we mentioned, but let's talk a little bit about the company. Eargo Inc. is a medical device company that basically creates products to assist people with hearing loss. So it basically creates hearing aids, okay, special types of hearing aids, and it had a huge bump earlier in the year as a result of the FDA ruling that allows over-the-counter sales of hearing aids. So it saw its prices go, the stock price go up earlier in the year, and since then the price of the stock has been, how should we say, beaten down. The company is located in California. It has 257 employees, and on January 11th, 2023, they filed an 8K form with the Securities Exchange Commission indicating that they are entering a 76-month lease as of April 20th, 23. That's when the lease will begin, and they're going to be renting, ready for this, 17,572 square feet of space for their business in Nashville, Tennessee. Interesting. Its share price has been beaten down, as I said before, from a high back in March of $5.82 a share, and now it's selling at a low of 55 cents per share, which is significantly lower than the minimum requirement of NASDAQ, which is $1. So I suppose the reverse split was taken into consideration to address their non-compliance with the $1 minimum as required by NASDAQ. Now, let's get a little bit deeper into this. On January 13th, it announced the plans for a 1-for-20 reverse split, which is scheduled to actually take place this coming week. We're recording this video right now on January 15th, 2023. It is a Sunday before the market opens this coming Tuesday. Monday is a holiday. It is Martin Luther King's Day. And they are planning on effectuating the reverse split on January 18th, 2023. The reverse split will take the float from a 400 million share float, which is very, very big in my opinion, to a much more reasonable lower float of 20 million shares. The stock hit a low of 46 cents 99, so 0.4699 on November 23rd, 2023, and has consistently been going up since then, and as of January 13th, 2023, the last trading day, it's sitting now at 0.5259. So at the current price, the reverse split, 1-for-20 reverse split, will take that stock price well over the NASDAQ required minimum of $1. Actually, it'll reach a price at the current rate. If it holds its current price, it'll be well over $11. Okay, so that's pretty significant. Now remember, the stock has been beaten down almost 89% since its high back in March 2023. It is a reverse split. It is in the biotech realm, although it's not a pharmaceutical. It's in that biotech realm, and it has notability because social media has on several occasions talked about EARS, and it has run up several times, and of course it has been pumped and dumped. So in other words, it's gone up and it's gone down. All right, so that being said, this stock is definitely a stock that we are planning to keep on our watch list as a result of the fact that it is going to be going through a reverse split, and reverse splits have been as of late, parabolic movers, especially when there's news involved. So again, not stock advice. We're not telling you to buy this stock, not buy this stock. We're not telling you any of that. This is just a show. We're just sharing with you our thoughts. We're planning on putting it on a watch list. They just entered into an agreement to lease out a rather large complex in Nashville, Tennessee. We're probably going to see, I'm guessing, some kind of news come out regarding what they're planning on doing with all this. I'm presuming that that's the case. That's quite often the situation with these companies. They oftentimes put out some kind of information regarding what's going on after the reverse split. I would venture to guess that with the lower float, this could potentially have a run. So we'll see what happens. We'll see if in fact it has that run, and we'll always be concerned as to whether or not there are any kind of registrations with the Securities and Exchange Commission to issue new shares, because that is quite often the case with a lot of these companies. And as we take a look at this particular company, we can see that there was a S1 filing on December 19th, 2022. So they have a registration in place to do a raise and to have shares. So a lot of times reverse splits will make the stock go up, and then all of a sudden there's an S1 shelf registration, which is good for 3 years. And of course, in this particular instance, it was filed on 12/19/22. And then they execute the shelf registration, and there's dilution. So that is quite common. I don't know if that's what's going to happen. Again, I'm not giving you advice. I'm just telling you what I see. And so that's basically what I see. So for me, it goes on a watch list as a potential day trade. We will see what happens after the reverse split. If there is enough volume to push the stock to a higher level, then it would probably be a good play for us to do a day trade on. And of course, knowing that there is an S1 registration, there's a very good chance that this stock is going to ultimately at some point do some kind of a filing. I don't know when, but certainly that is a concern, and that can create dilution, and dilution can create a situation where the price can plummet. So we don't want to get caught on that type of a situation. Again, not giving you advice, we're just sharing stuff that we're seeing and what we're planning to do. Okay, it's Coach Nick Money. I hope you enjoyed this episode. Much love to everyone, and I'm out of here. Peace. Bye-bye.